AVAX Avalanche is looking good for another 2 or 3x, and ThorChain, aka Rune, is looking good for another 5 to 10x. It is panning out as anticipated following textbook Elliott Wave and Fibonacci price action, and that's what we're going to focus on in today's video. If you like today's content, like, subscribe, hit the bell notification. My name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So when it comes to AVAX, we did a video on the 5th of May. 5th of May, so you'll see the date here. I've just taken a screenshot down here, 5th of May. And what we said is looks like the market's made a nice initial 1, 2, 3, 4, 5 to the upside, looking like an A, B, and a potential C to the downside. And then we should anticipate new highs being made. That's what we're focused on. And look what happened with AVAX in particular. If it lets me unfold, bam, we've had this initial move to the upside, which we're going to dive into. Is this nice movement, which is something called an overbalance of price. So it's looking healthy. So we're going to dive in a bit deeper with that in a second on a live chart. Then we spoke about Rune. We did a more macro picture. When was this video? This was on the 11th of March. 11th of March, what we said was on the 11th of March, we said on a macro, it's looking like a big wave 1, an A, B, C of a wave 2, and we should anticipate a big wave 3. And look what has happened with Rune so far. Again, it has unfolded nicely. It's done this nice big bullish movement to the upside. Very, very clear signals that it looks like it'll probably make all-time new highs. So these price zones we are going to dive into in a live chart as well. Now, a quick reminder, because some people just don't know how powerful Elliott Wave and Fibonacci can be on reading the markets, because it's really fear and greed that's driving the markets. It's psychology, human psychology. And we want to use all the information all the time. And one of the just phenomenal piece of technical analysis that we did last year, around August last year, was on Solana. And I just did a 9-part series on Solana, breaking this down and how we did this. But this video on the 15th of August, before Solana took off, we did a video up here, we did a video down here, and then we did this video when it was around here, saying that it's likely to hit these zones, these price zones, based on Fibonacci and Elliott Wave. And the wave count, what we're doing is we're combining Elliott Wave, which is really how the markets tend to unfold in 5s and 3s. And we saw this very clean pattern, a 1, 2, 3, 4, 5 of a 1, and then a nice clean A, B, C of a wave 2. And what we want to know is wave 2s are often a launch pad, like a baseline for a rocket ship for price to take off. And what happened with Solana? Well, and I'm showing you this because it's likely that we're going to see this with a lot of cryptos. Look at this price action. Just beautiful, beautiful textbook stuff. We went from around $25 and it went to like nearly $300, like $250, $270 with Solana. And it just followed a textbook 1, 2, 3, 4, 5 wave structure. And now we've seen a very big correction with Solana as anticipated. So what really, we're going to dive into these live charts. But if you want to learn how to do Elliott Wave and Fibonacci and read the markets, wave 2s are one of the most powerful wave structures. And it's really what we want to see in advance. Where possible, it's probabilities never certainties, but it's to take the guidance. When the market goes up, it tends to have a retest, and it's called a wave 2. And there's particular Fibonacci ratios that wave 2s come down to. And we cover this in the lessons. So I would highly encourage you to take my free Elliott Wave and Fibonacci Masterclass. I cover the key 4 rules with Elliott Waves. And if you like it, buy the course. It's on a massive discount right now. It's £97. You'll get an invite to my private Telegram group. We've got a phenomenal community. We do workshops on the weekend so you can get more access to me. So you can just ask your live questions and we do a live technical analysis. We do that on the weekend with the private community as well. It's phenomenal. But what we're going to do now, is we're going to jump into the live charts. So let's start with AVAX. Avalanche, right? We've just seen phenomenal movements with Avalanche since January 2021. A nice move, classic ABC correction, a massive retest of the wave 2 low. This acts as a launch pad, like we said. Remember, we're going to identify these in advance. And we had an explosive wave 3, a nice clean ABC, what looks like a wave 4. And the last video that we did was really around this point over here. And if I just bring this back up on the PowerPoint that we have, what we just said in advance, I've drawn this over. This was today's move. on the 5th of March, what we said was it's looking like we should anticipate one more move to the downside before it takes off, right? Because this is the whole trick, not even a trick, it's a skill set of anticipating what the market is likely to do before it does it, right? So first thing, we're going to jump into the top left-hand corner of this chart over here. The weekly momentum is bullish. We took that into account. We said we should anticipate sideways to up movement. Always want to go in the direction of the trend. And then what we did with Avalanche, the key thing I wanted to get across in this part is we did a video here and we said it's likely to make a lower low. That's going to make it high probability. And as soon as it hits this zone here, which is a 78.6% retracement in this zone over here, this is the high probability setup. And what we do is we combine it with a bullish momentum reversal, which is this over here. And when those two things coincide, so you have momentum on 2 time frames, you have pattern, and you have price, and then it's all about taking the relative or the correct action. So now that the market is taken off, what I would anticipate is some type of correction as the momentum goes to the downside after a big move to the upside. And this is considered, in the grand scheme of things, a relatively big move. We went from $68 to around $90, a 50% move to the upside, right? For a big coin like Avalanche, that's quite significant. But what we should anticipate is some type of retest, a correction to retest this low down here as a wave 2, and then we should anticipate a big nice movement to the upside. So that's Avalanche as an update. We got it pretty much bang on with this part. It's done this over here, but I would anticipate a minimum if we're, because the whole trick is risk management, right? You want to not get overly confident even when it looks this textbook, is to go Avalanche looks good for a 5-wave sequence to the upside, and we haven't had the full 5-wave sequence. What we've had is a nice, from January 2021, a nice wave 1, a wave 2. This is the psychology of mass herd buying and selling behavior, people betting on the market. And wave 3, a very clean ABC of a wave 4 that didn't go into the range of wave 1, and we should anticipate one more leg to the upside. That's most common, most typical, and this is what we're looking for. And this movement here would tend to typically go into a 1, 2, 3, 4, 5-wave sequence. So it looks like we've got the initial wave 1, a wave 2 of a wave 5. I just want to make this really, really clear. What we're looking for is a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 of a micro degree count, or a minor count is fine. That's what we're looking for. So it looks like we're on this part of the movement. Doesn't mean it's guaranteed, but we're probably going to see this break down into a 5-wave sequence also, which is important to know. You know, it looks like initial wave 1. We'll probably get some type of wave 2, a wave 3 for 5 over 3. That's what typically tends to unfold with, especially when there's many participants, right? And that's what we literally want to see ahead of time. So I would anticipate, because the momentum is now looking bearish, like it's overbought, the blue and the red lines are over here, we should anticipate sideways to down for a couple of days, and then on the next bullish reversal will probably be the wave 3 of wave 3 over wave 5. What? In my masterclass, I promise you, I'll cover it in detail. I cover it in such detail, and this information will become much clearer. So I'd actually recommend pause this video, go into the masterclass, take the full masterclass, and then come back to this video, because it'll make a lot more sense if you're not used to Fibonacci and Elliott waves. So next we're going to jump into is Rune, right? Rune, we were looking, I can't remember who mentioned this, or if I just randomly looked at it, if it was just a highly searched coin, but I was looking at it mainly from the context of we've had this nice movement to the upside, which broke down to a 1, 2, 3, 4, 5, pretty clean. And then we've had this very big correction. But look at the size of these, right? It's A, B, C. That's what we anticipated for a wave 2. And the video we did was around, it was around here, give or take. You can actually see it. If I pull up the PowerPoint again, and I just move this to the side, it was, the date was the 11th of March. So the video was, yeah, roughly around this zone over here. But what we can see now, if we just zoom in, let's just do two things actually, because we want to keep the context in perspective. What we anticipate after wave 2, because a wave 2, this is really, really important. It's one of the most powerful waves that you can identify in advance. And even if you're wrong half of the time and you're right half of the time, and you minimize your downside on the half when you're wrong, and you really maximize when you're right, it can be very, very healthy, right? So that's what we're looking for. So it looks like we are going to see a nice wave 3. Right? Not guaranteed, it's just highly probable. And what we're going to look at in the top left-hand corner is this weekly momentum. You can see that it's bullish. See the blue and the red line are pointing up. Want to be aware of that. That we took that into account when we did the initial analysis as well. And then what we're looking for from Rune Thorchain, is this is the typical wave 3 zone, and this is an overextended wave 3 zone. And I wouldn't be overly surprised if it hit the overextended, if there is a lot of optimism that might come into this project. But again, I'm purely looking at this from a technical standpoint. I'm not even looking at the fundamentals, because most markets, whether it's stocks, whether it's gold, like commodities, if it's the forex markets, most of the buying and selling behavior is based on human psychology of fear and greed and optimism and pessimism. And we can just read the markets, and this is what it's telling us. So it's highly probable we're going to see one of these two zones, right? So even though this initial movement, even though it's nice and big, it went from like $3-4 to like $8, like a 2x, right? That's very, very significant. But when we did the video, it was around $4-5, and the potential is $35, that's an 7x, to $55, like a 10-11x from the first video. So now with Rune, let's just get a bit focused over here. The first few things to keep in mind is this movement to the upside is very impulsive, right? And that's one of the biggest values of Elliott Wave. We want to see if the market's in an impulsive structure, and that tells us the buying psychology of the mass participants. There's millions of, thousands, if not millions of people participating, and what's likely to occur next. So this looks like a wave 1 to a wave 3. We should get a 4 and a 5, right? And then we'll probably see a correction before it takes off again. That's what we want to be aware of. We've got something called an overbalance of price. This movement to the upside is clearly bigger than any other movement. Any other movement, this movement here, and this movement here, we can clearly see that this is much bigger, right? That's a very big clue that this is very highly probable, not guaranteed, highly probable that this low will hold. So important to note. Probability is never certainty. So if you do use a stop loss, you don't need to have it any further than there. If it goes below this point, it invalidates the wave count, then we need to reevaluate. And then, even having your stop loss here now, or even here in the range, top of range of a wave 1, because a wave 4, if it does a correction, should not go into the range of wave 1. So with Rune, let's just see the momentum. Excuse me. What I would look for here is, even though the momentum is bearish, pattern supersedes momentum, especially short term. And what I mean by that is the following. When we're looking at this movement, right, this movement to the upside, to me, it looks like a wave 1, a wave 2, a very impulsive wave 3, and we'll check the ratio in a second, a wave 4, and a potential wave 5. And then we should anticipate a bigger correction before a bigger move to the upside. Right? This is typically what tends to unfold time and time again. And you'll see this when we just zoom back to Rune, as in ThorChain, not that long ago. We saw it over here. We've got these movements to the upside with corrections. Big movement to the upside, correction. Big movement to the upside, then a big macro degree correction. And that's what we're looking for over here. So ThorChain is looking healthy. It's looking good. So expect sideways to down for a few days for a wave 4, and then a final wave 5 to the upside before a bigger correction, and then for the next leg. And again, you can kind of adjust this to your own strategy. And by the way, I'm telling you, take my free Elliott Wave Fibonacci Masterclass, because I cover this, because a lot of information. We're looking at momentum, we're looking at pattern, and we're looking at price. And we want to get familiar with this terminology, especially with the Elliott Wave counts. And there's 3 key rules that you must know with Elliott Waves. And if any one of those rules is invalidated, it gives us a massive clue on what we're looking at. How are the people feeling that are participating in this, including the major players and the smaller players? It's all baked in. That's what Ralph Nelson Elliott figured out. And by the way, the course looks like this. You got Elliott Waves, you got Fibonacci, you got risk management. And when you click into Elliott Waves, it's all literally broken down, like step by step, 3 to 5 minute videos, and I've broken it all down for you. And it's there as a one-off payment, and you have it for life. So it's pretty cool. All right, I want to finish on Luna as a bonus. Luna, right? Luna's been just tearing it up, right? Tearing it up. Like Luna, if we just go to CoinMarketCap, it's been a top trending search coin. The movement has been just astronomical. It's not in the, the top coin. Look at that one. I'm just laughing at this one down here. Anyway, we'll type in Luna, right? Luna, massive ecosystem, stable coins, do some phenomenal things. But the market cap is 35 billion. It's a top 7 cryptocurrency, and it's just exploded to the upside recently. And right now, I did a video not that long ago, and the video was really about, not looking. Let me just pull this up over here. I think I said it here with the channel. If I go to, if it lets me go here, channel, bang. What we said with Luna, I think the title was, it's nothing to do with the fundamentals of Luna. The title was top 3 reasons not to buy Terra Luna. And this is purely from a technical standpoint. Yeah, from a fundamental perspective, we're going to be all over it. It's phenomenal, the ecosystem, absolutely phenomenal. And it's clearly a top player because it's in the top 10. Top 7, you don't get into the top 10 cryptocurrencies of all cryptocurrencies when the market cap is 1.8 trillion in total, and Terra Luna is 35 billion. That doesn't happen by accident. So they're doing something. But let's now park that. We go, it's phenomenal. We've agreed, right? Phenomenal. If we again go back to Terra Luna and we go to their website, Luna Money, Terra.money, programmable money for the internet, phenomenal website. It's got stable coins, it's got an ecosystem. We can read all about this, their mechanism. They figured a lot of stuff out. So this is great. Brilliant, right? No doubt about it. But that's not what drives price. You go, what? Yeah, how does it not drive price? I go, what drives price is profit and loss, human psychology, fear of missing out, fear and greed. So when we're looking at this movement here, when I'm looking at this Terra Luna movement to the upside, this to me represents fear of missing out. This is FOMO. I've heard about all this amazing movement, big correction, and it's taken off. There's going to be a lot of people that are looking to buy Terra Luna right now. Anything can happen. It can double again, but it's very unlikely because we can only do probabilities and never certainties, and we want to go with the edge. We want to become the casino. The casino doesn't win every single game, but if it plays enough games, it wins overall, and it has around a 3 to 5% edge depending on the game. And this is the game that we're playing. We're playing crypto tennis over here. And what we can clearly see with Terra Luna, since January 2021, similar to Avalanche, nice wave 1, we've had a very clean wave 2, an explosive overextended wave 3, a clean ABC of a wave 4, and it looks like we're forming this final part of a wave 5. And remember what I said to you when I cover in the Elliott Wave Fibonacci Masterclass, there's always a wave count above and a wave count below. And what I mean by that is we've got this beautiful sequence. It's textbook. This is like, if I was writing a textbook, I would use this as an example. By the way, I was trading Luna down here, anticipating this, right? Anticipating this, similar to Solana. I would say this movement to the upside in a 5-wave sequence looks like it has formed, hasn't been confirmed, but it has formed or is forming a wave 1. A 1, 2, 3, 4, 5 of a wave 1. That's what I'm seeing. Now, it's too early to say, is this going to be the top? Is this going to be the top? It's a high probability. Main reason is, one, we've got a 5-wave sequence. We've got a 1, 2, 3, 4, 5 on a macro. Well, now an intermediate count. But here we've also got a very clean 1, 2, 3, 4, 5 of a 1 degree down count. So that tells us some very valuable information. We've exceeded the previous high, only by a fraction, but you can see it tagged over this previous high. And now the real question that you should be asking, and we can use the information at hand to help us, is this movement here a continuation of the trend? So we'll see all-time new highs. Or is this the high, and we've got a trend reversal on our hands, and this is simply a correction before we're going to have an explosive sell-off, explosive movement to the downside, right? So this is what we do. Is first of all, we agree, me and you, we agree, we don't know. We can only do probabilities and never certainty, so no one knows. But what information do we have? So I'm going to jump into a weekly chart. I covered this a lot in my course because this is so important, because we want to use this information. The weekly momentum, you can very clearly see, is above this black line, and that means it's overbought. That means the upside movement should be limited. So when I say that, if we're looking at this, when we're looking at, especially this last one over here, this one over here, when this was the last crossover, it coincided with this. And we had sideways to down movements, and it went from what, pretty much $100 down to like $45, 50, 60% correction, right? That's big. That's big. But now we're looking for a bigger correction. So now we've got this potential downside. So we go, okay, the trend is no longer in our favor. Even though the overall trend has been up, we are now looking like we're coming to the end of a 5-wave sequence trend, a 1, 2, 3, 4, 5. And now the weekly momentum is overbought and is looking like it's going to be bearish. It's going to take one movement to the downside, one more week, and the blue line is going to cross over the red. So now the upper degree time frame suggests to us we either want to be looking to short the market, looking for selling positions if you're using futures contracts, or stand aside, or if you're already in this, to maximize your profits right now. Now is the time to be taking, if you haven't taken any profits, you'll be taking some profits, because now the probability states, again, just looking at this, even if we're just looking at the really immediate time frame, what I can clearly see is a nice wave 1, a wave 2, very clean 3, 4, and what looks like a 5. Now, if I had to decide today, and you go, Jigir, what does this look like to you today, right now? Well, the weekly momentum is overbought. On the next bearish reversal, on the daily chart now, where it's going to be pointing in the direction of the upper degree time frame, could be the trend reversal. So here, you'll use the same thing for shorting the market and taking maximum profits. You'll do the same thing. And by the way, again, if you haven't taken my free Elliott Wave and Fibonacci Masterclass, I break this down because I'm speaking quite fast and I'm combining a lot of information. But in the Masterclass, we separate the Elliott Waves, the key rules, separate the Fibonacci ratios. And if you like it, if you take the full course, I segment everything down so this jargon that I'm speaking becomes more and more familiar. So what we don't know right now, but we have to have a school of thought, right? Based on the information at hand, what's the probability? What do you think? What is it looking like? So to me, what is looking like, if I just get rid of this as well, is, to me, this initial move to the downside looks like the new trend. And I would actually call this, if I just change it to 20, a wave 1. Okay, we don't know if it's a wave 1, but, or is a wave 1 over wave A. And what I mean by that is a movement to the downside, 1 or A, 2 or B, and then a further move to the downside. And what's going to really confirm it for us is whether this high over here, if it holds. If it gets exceeded, then we need to reevaluate. But until that happens, I would be looking for short positions. I wouldn't just short the market and I wouldn't just sell. You would use a trailing stop loss or a trailing entry point to the downside. But what I'm also looking at over here is, we're talking about wave 2s today, right? And in my Elliott Wave course, when we're talking about wave 2s, if I go to, it's over here, wave 2s, I think it's, oh, well, I was gonna do it on this side here. The basics, the real basic and the foundation, Elliott Wave basics is lesson 1 after the onboarding, is when we're looking at Elliott Wave counts. Normally we're looking at it on the upside, but the reverse is true to the downside. You just flip everything upside down. So now we're looking for a wave 1 and a wave 2 on the upside. So it's a reversal. So what I mean by this is, this to me looks like a pretty clean let me just make sure I get this, an A, B, C correction. Now, a lot of people, you may be one of them, trade on a smaller degree time frame. So what they'll look for is they'll go into an hourly chart and really look at this in a bit more detail. I'm going to stick on a daily chart. I'm just going to do this. That just tells us if the bearish momentum on the daily chart occurs and this high has not been exceeded. If it's been exceeded, then we reevaluate, right? So we don't need to get too hung up on whether that happens or not, because no one knows what's going to happen. But we just go, if this high is not exceeded and we have a bearish momentum reversal on the daily and this pattern holds, what this looks like to me is a wave ABC. So I'm going to do a retracement. I'm going to take this low. Let me just move this up here a bit. I'm going to take this high to this low and do a retracement. And the typical maximum wave 2 retest of a wave 1, the maximum is 78.6%. So we're within that range. And then an alternate price projection is we measure wave A and project it from wave B. I'm just going to do this like this. Bang. Let me just make sure I got this bang on. And then the number that I want is the 100%. That's the most common, the most significant. And we can see we're right within that range. So if this holds, this looks like it may be a wave. I'll do it like this. So with Fibonacci and Elliott wave, you can use it for entry, but also exit. And also knowing when not to buy. It doesn't mean we're not going to see all-time new highs. It's just the odds are against that happening right now because the weekly momentum's down, the daily next momentum's down. We're looking like we're getting a clean ABC correction. Unless this high gets taken out, I still want to look to long this position. I'll look for shorting opportunities. The minimum that tends to occur after a 5-wave sequence to the upside, the minimum that tends to occur is a 50% pullback in a minimum of 3 clean waves. And we haven't had that yet. This is 1 wave down, 2, and then 3. We should anticipate that as a minimum. But when we now zoom out, because we want to take things into the correct context, if we're just looking at it like this, we don't get the full psychology of what's been playing out over a 12 to 15-month period. When we look out the macro degree and we go, hey, this is looks like an end of a major 5-wave sequence where the market has gone from like $1 to $100. That's 100x. You know, we're talking about Luna literally was, what was the price? It was like $1. It was $1 in January 2021, right? And it went as high as $100. So 100x, right? That's very significant. But that means it's ready for its corrective cycle. It's ready. And what typically tends to happen is a big correction, right? When I say big, I mean a 3-wave A, B, C. Something like this. Almost exactly what we saw here for this wave 2. It's almost, we'll see a bigger version of that. A bigger version of a wave 2 correction, but on a macro degree count. Hopefully this is making sense. And I'm deliberately spending a bit of time on this because I just see a lot of people losing money because they are so focused on what's happened here, and it feels like it's only going to continue. But the odds state that we're probably going to see a macro wave 2 correction, where we're going to see, you know, a 50, 60%, maybe a 78.6% pullback, where Luna will go down to like $50, $30. As unlikely as that may seem, it tends to just unfold. And that's one of the real beauties of technical analysis. You can be very, very objective, mechanical. And this is what this shows you here. This is what we're looking at here. We're saying Luna, literally, like if we just look at this, like textbook style, right? This is the actual, right? Actual. And I've been talking about Luna since down here, right? Before it took off. I'm literally anticipating this. And when we look at the theory and we go, what do we anticipate in the theory? We look like we've got this 1, 2, 3, 4, 5. That's tick. What typically follows is an A, B, C correction. So if you look into long Luna, it's to be patient for 3 to 6 months. I know that may sound crazy, but that's just the nature of the markets. That's how they tend to unfold time and time and time again. So there you have it. There you have it. So take the free Elliott Wave and Fibonacci Masterclass. I built it for you so you can really get a flavor. And if you want to join my private community, get access to me on the weekends. We do weekend workshops. We've got live Q&A. We do live technical analysis and a few other things, a few other bonuses that we do, because we're all about here trying to give the guidance to help increase your financial health so you can really enjoy the banquet of life and decrease the stress of money, right? Decrease the stress of money. All right. I don't know if crypto is the best way of doing that in terms of a volatile market, but there's strategies where you can minimize the downsides, maximize the upside, and do proper risk management. All right, we're going to finish on a quote. It has been my observation that most people get ahead during the time that others waste. Henry Ford. It has been my observation that most people get ahead during the time that others waste. Now, our market, I'll say our market, the crypto markets, has been sideways to down for quite a while, right? And the low caps, oh my Lord, they're getting just murdered right now, like the price movement. And what are people doing right now? Well, some are just reading the news and going for an emotional roller coaster, and others are just double down, doing Elliott Wave and Fibonacci and learning, looking at markets and reading the psychology and back testing and going, right, if I could look at the markets before the big movement, was there some clear evidence, like with the Solana chart, was it clear evidence it was likely to do that before it happened, where you can now start to anticipate and be 2 steps ahead of the market rather than always being 2 steps behind. So if you like today's content, like, subscribe, hit the bell notification, keep doing what you do, and I'll see you soon, and hopefully in one of my live workshops. All right, see you soon.